Under the name of the European Central Bank, ECB, a scientific paper has been released that surprisingly sheds light on the positive aspects of Bitcoin. The conclusion is noteworthy. Bitcoin is an alternative to traditional financial markets, offering transactional advantages and serving as a store of value in countries with unstable currencies. Typically, Bitcoin doesn't receive favorable commentary when European currency regulators speak up. The last time the ECB addressed Bitcoin on Twitter, they linked an article by Ulrich Binzeil and Jürgen Schaaf titled, "The apparent stabilization of Bitcoin's value is likely to be an artificially induced last gasp before the crypto asset embarks on a road to irrelevance." Interestingly, the publication date almost precisely coincided with the lowest point of the last Bitcoin bear market. Since then, Bitcoin has far from disappeared into irrelevance. This acknowledgement is also made by the authors of the current scientific paper. Despite its wide price fluctuations, might have been appreciated also as a store of value or medium of exchange in countries which experienced a loss in the purchasing power of their domestic currency. Since the publication of Binzeil and Schaaf's grim blog post, Bitcoin has surged by more than 150%. Additionally, some of the world's largest asset managers have submitted applications for a Bitcoin spot ETF, awaiting approvals. Positively speaking, at least by ECB standards. The ECB paper titled "Global and Local Drivers of Bitcoin Trading" compared to fiat currencies attempts to determine the factors driving Bitcoin adoption by analyzing the trading volume on peer-to-peer exchanges, P2P, like local Bitcoins and Paxful. The author group comprises 3 trained economists, 2 of whom work as senior economists for the ECB, while the other is a former intern. The fact that the authors have delved deeper into Bitcoin than Binzeil and Schaaf becomes evident right from the start. They correctly cite one of the reasons why Satoshi Nakamoto created Bitcoin. Bitcoin was created with the aim of providing an alternative payment system that would operate in a decentralized way, free of the control of a third party or an authority. Shortly after, however, it becomes clear once more that the approach of the prevailing mainstream economics cannot fully explain the success of this nearly 15-year-old asset. Considering the apparent lack of a fundamental value, the exponential growth in the volume of transactions involving Bitcoin and in its price is certainly surprising. This in turn has generated a lively and fast-growing debate among economists about the motivations behind the use of Bitcoin. Value is inherently subjective. Representatives of the Austrian School of Economics provide arguably better explanations for the high demand for a demonstrably scarce and uncontrollable form of money at this point: high Bitcoin adoption in less developed countries. The authors emphasize that notably, it's the emerging and developing countries leading the adoption of Bitcoin. Currencies like the Kenyan shilling, KES, or the Nigerian naira, NGN, have seen relatively high trading volumes on P2P exchanges in recent years. The volume, when converted to US dollars per 1,000 inhabitants in these African currencies, was significantly higher compared to that in euros. The US dollar itself was excluded from this analysis due to its unique position. In less developed countries, people predominantly trade on peer-to-peer exchanges, which serve as platforms bringing buyers and sellers together, unlike in industrialized nations where it's more common to buy Bitcoin on a centralized exchange, CX. The most frequently used currencies in peer-to-peer transactions, in absolute terms alongside the US dollar, are the Nigerian naira, Russian ruble, Chinese yuan, and the Indian rupee. Inflation protection and an alternative to traditional financial markets. Interestingly, Bitcoin is currently trading at an all-time high against the Nigerian naira. The authors highlight that in 2022, among the 20 countries with the highest adoption of Bitcoin and similar currencies, only 2 were industrialized nations. This indicates that especially when fiat currencies experience significant loss in value, people are increasingly inclined to seek alternatives. This is a conclusion drawn by the economists with ECB backgrounds as well. Importantly, one local driver, the depreciation of the domestic currency versus the US dollar, plays a role in encouraging more Bitcoin trading against the currencies of EMDEs, again in particular since the start of the COVID-19 pandemic. This finding suggests that Bitcoin might be used as a store of value or medium of exchange in countries which experience a loss in the purchasing power of their domestic currency. They add to this observation that macroeconomic instability might lead to increased usage of cryptocurrencies. Ultimately, the insight of the three economists is that Bitcoin can serve as a better store of value compared to the national currency of countries with high inflation and a tendency towards weaker exchange rates, and a typical statement for ECB representatives. Indeed, Bitcoin effectively shields against the inflation of the euro or US dollar. Since 2011, when measured in euros, Bitcoin has shown an average annual growth rate of over 100%. In essence, this means that, on average, Bitcoin has doubled in price each year since then. The authors also acknowledge that Bitcoin has advantages as a means of payment. Third, residents from EMDs may use cryptocurrencies as a means of payment in cross-border transactions to circumvent capital controls or to lower the cost of receiving remittances from abroad. Furthermore, there's the recognition that Bitcoin can also serve as an alternative investment to traditional financial markets, which many individuals in less developed countries lack access to. Although the economists repeatedly emphasize that Bitcoin is speculative, they thereby acknowledge another relevant advantage of Bitcoin. Crypto assets may offer a speculative alternative to traditional finance when this is not available, in particular in EMDEs, where the share of younger risk-prone population is higher. Another important finding of our analysis: around 2 billion people lack access to a bank account, excluding them from investments like stocks and bonds, which could offer some protection against the devaluation of fiat currency. Bitcoin, on the other hand, is accessible to anyone at any time, as the authors correctly note, without the need for intermediaries. The authors conclude that the fundamental value of Bitcoin can vary significantly between industrialized nations and emerging economies, which contradicts the claim that Bitcoin apparently has no such value at all. Conclusion: it's a positive departure from the usual stance of the ECB regarding Bitcoin as seen in this working paper. It goes far beyond the level of Jürgen Schaaf's claims, who asserted that the value of Bitcoin is mathematically at maximum zero and, in his opinion, even socially negative. The overall sentiment among European currency regulators has generally been something along the lines of, "Nobody needs Bitcoin except for criminals." At this point, it's commendable that senior economists at the ECB are distancing themselves a bit from this privileged viewpoint. The more Bitcoin spreads, the more people engage with it and recognize its utility, making it increasingly difficult for Bitcoin detractors to disseminate their short-sighted criticisms. Whether the centralists, like those surrounding Christine Lagarde, convicted for negligent handling of public funds, will change their fundamental opinion on Bitcoin remains to be seen. It's more likely that they'll be the last ones to do so.